All right, we're going to break down a term you've probably heard thrown around a lot lately, quantitative tightening. Now, I know it sounds super complicated, but it's one of the most powerful forces shaping our economy, and the Federal Reserve is about to make a huge move that could directly affect your money. So let's get into it.
So let's just dive right in. The Fed, the country's central bank, is signaling a pretty major shift in its whole strategy. And the big question on everyone's mind is right here. What in the world does this actually mean for our investments, our savings, the economy as a whole?
And here's the headline news. Fed Chair Jerome Powell is thinking about hitting the pause button on what's been one of the biggest economic experiments we've seen in a long time. This policy has been a massive force in the markets for the last couple of years, and now, well, that whole era might be coming to an end.
This brings us to our first section. Are we looking at a big pivot from the Fed? This could be a real turning point for, well, pretty much everything.
But before we can really dig into what a pause means for the markets and for you, we've got to get a handle on the policy itself. I mean, what exactly has the Fed been doing all this time?
Which leads us straight into part two. Let's unpack quantitative tightening. You'll usually hear people call it QT for short.
Okay, so in the simplest terms I can put it, quantitative tightening is basically when the Fed starts to shrink its giant portfolio of bonds. By just letting these bonds expire and not buying new ones, it basically acts like a giant vacuum cleaner, sucking cash right out of the financial system. And the whole goal is to tighten things up, right? Make money a little more scarce, a little more expensive to borrow.
And this slide illustrates the difference perfectly. Think of it like this. Quantitative easing, or QE, that's the gas pedal for the economy. The Fed is buying bonds, flooding the system with cash, and pushing interest rates down to get people spending and investing. QT is the exact opposite. It's the brakes. The Fed stops buying, money gets pulled out, interest rates creep up, and it makes everyone a little less eager to take big risks.
So, why did the Fed feel the need to just slam on the brakes in the first place? Well, that takes us to Section 3, the post-pandemic problem.
Let's rewind the clock to 2020. To stop the economy from completely collapsing during all the lockdowns, the Fed hit that gas pedal hard. They launched this massive stimulus program, just buying up bonds left and right to pump cash into the system and keep everything from grinding to a halt. And the scale of this was just mind-blowing. At its peak, the Fed's balance sheet, its portfolio of all this stuff, swelled to almost $9 trillion. That is just an almost unimaginable amount of money being pumped into the economy.
But all that money printing came with a pretty serious side effect. By June of 2022, inflation shot up to 9.1%, a level we hadn't seen in 40 years. The price of everything was just skyrocketing, and the Fed knew it had a huge problem on its hands.
So you can see how this all connects. First, in 2020, you get this massive QE to save the economy. Then, by the middle of 2022, bam, inflation is at a 40-year high. And in that very same month, the Fed pivoted on a dime and started quantitative tightening to try and put out that fire.
So the crucial thing to get here is that the Fed started QT for a few really clear reasons. They had to drain all that extra cash sloshing around, they wanted to push interest rates higher to make borrowing more expensive, and ultimately, they just needed to cool down an economy that was running way too hot to get inflation back under control.
Okay, this all sounds good in theory, right? But what actually happened when the Fed started pulling trillions of dollars out of the financial system? That brings us to Section 4, how the markets reacted.
Because this wasn't just some academic exercise. Pulling the plug on all that support had very real and very, very dramatic effects on investments, especially things like stocks and crypto.
Now, what's really fascinating here is the story this data tells. In 2022, when QT kicked off, the stock market just tanked. But then look at 2023. Even with QT still happening, stocks rallied like crazy, mostly thanks to the AI boom. And by early 2025, the market was already rising because it was anticipating the end of QT. The market doesn't wait for the actual news. It always tries to get out ahead of it.
And if you think stocks had a wild ride, just look at a high-risk asset like Bitcoin. The liquidity drain in 2022 was just brutal. Prices absolutely plummeted. But here's the kicker. Anytime a little bit of liquidity was added back into the system, even temporarily like during the bank rescues in 2023, Bitcoin just surged. It is incredibly sensitive to these money flows.
And honestly, this quote just nails it. Bitcoin thrives on two things: extra cash in the system and the expectation of easier money down the road. The second the market gets a whiff of a policy shift from tightening back towards easing, riskier assets like crypto often just take off.
So, this brings everything full circle and leads us to our final section, what to watch now. With all this backstory, what should we actually be looking for as the Fed gets ready to pause this whole thing?
And here's the crucial takeaway. Pausing QT doesn't mean the Fed is hitting the gas pedal again. Not at all. But it does mean they're taking their foot off the brake. For the past 2 years, this policy has been a constant headwind pushing against asset prices. So just removing that headwind is a really significant change.
So, here are 6 key things to watch like a hawk. First, the Fed's balance sheet itself. Is it actually still shrinking? Second, pay attention to the Fed's guidance. Listen to the tone of what they're saying. Third, Treasury yields. They tell you what the market expects for interest rates. Fourth, funding rates. How expensive is it for banks to get money? And finally, what are investors actually doing? Is the whole stock market rising or just a few big names? And what are the big bets being made in crypto? These are going to be your clues.
And that leaves us with the big, final question. The quantitative tightening chapter might be ending, and that removes a huge obstacle for the markets. But with inflation still kind of sticky and the global economy facing all sorts of challenges, are the headwinds really over? That is what everyone is going to be watching next. Thanks for joining.